the interesting stuff is all this negativity is coming out, about growth shrinking and all that. You wouldn't see it when you look at the markets. I mean, as you see here, and as you may have heard on last week, the S&P 500 hit 1500 here. As you can see, the S&P hit the psychological round number there at 1500. Okay, that's where we are currently right now. And as a matter of principle, what I usually do is when the market hits those psychological round numbers like 1500, 1400, I mean, I just start shorting the market. So what I'm actually going to do this week is I'm going to establish short positions on the S&P this week, starting today. And actually, my favorite market to short is not actually the S&Ps, it's the NASDAQ, as I'll show you in a second. But let me just show you what I'm going to do here. In fact, you can see why we are getting very close to those important resistance levels. Okay, so if you actually join up these highs, so here we have the highs back in March of 2012, and if you connect that to the highs we had here in September of last year, you can see how close we are right now. Okay, you can see how the S&Ps right now as we're speaking are so close, in fact bang on those resistance levels. Okay, let me just look at the Dow as well while we're on this. Okay, so here's the Dow, or the Wall Street market as shown on ETX. Okay, so again, yeah, so if you actually connect these highs, you can see, yeah, we're right there at resistance currently. Question is the Dow likely to get to 14,000 before we drop? It's quite likely, but then again, not necessary either. And yeah, we also have support here underneath as well, so that's a key level to watch. As you can see here, we're almost in this kind of parallel channel on the Dow, as we can see here. And let's go. So the question is, how do we get short? Let's go to the S&P 500. What you can do is, as I said before, as a matter of principle, I start shorting when a market gets to the psychological round numbers like 1500. So you can actually go start shorting now and put a hard stop like 10, 20 points away on the S&Ps. If you want to be more cautious, and that's fine, you can actually go on a weekly chart here. Okay, you can go on a weekly chart, and you can short when the S&Ps close. You can actually short when the S&P closes below the previous bar, and that's set. So if you get it close below, let me just show you. Okay, so you get it close below that bar, 1480, then you can start shorting, looking for a move back to this mean area, this 21 period moving average here. Okay, and another way to do it would be, if you want to do it this way, you can go on a daily chart. Okay, and put a momentum indicator here. I'm using the Awesome Oscillator here. You can use a MACD if you want, but I quite like this one because it shows me when the momentum is dissipating. Currently, you can see we're getting these blue bars here, so showing momentum is still to the upside. So what you can do is once you get that momentum bar turning red, so once you get that one red bar here, then you can actually start looking to short. It is a bit more conservative, it is a bit more cautious, but then again, it can also give you safer entries into the market. Okay, same with the Wall Street, same with the Dow Jones. You can see here momentum on the Awesome Oscillator just increasing. It's all blue. So on this situation here, again, what you can do is just wait for that one red bar, okay, or two, but I prefer one here. When that bar turns red, then you can start to short on the Dow here as well, as a more conservative and safer entry into the market. Okay, personally I prefer the NASDAQ here to short, purely because it's been the weakest market out of all the major markets. It's been the weakest here. So if I want to short something, I prefer to short the weaker market because it's going to have a more dramatic, probably more distinct fall or decline. And part of the reason why the NASDAQ has been the weakest here is because what's been happening on Apple shares. So here for me, as you can see here, we have this. Let's get this. Yeah, so we got this sort of box pattern here on the NASDAQ. Okay, and in fact, I'll show you that we're also in a squeeze as well. If I just get back my squeeze chart here, chart template, squeeze. Oops, do that one more time. Right, and the squeeze is just basically Bollinger Bands. Let's get rid of this. It's Bollinger Bands, Keltner channels. Okay, and you can see that those Bollinger Bands right now. You can see those Bollinger Bands are entering those Keltner channels. The blue lines entering the red lines. Okay, showing that we are getting set for a very major explosive move here on the NASDAQ. All right, so that's something to watch out for. Let me just get rid of these I'm just get rid of these. Okay, yeah. So what you can do here on the NASDAQ, again, as mentioned before, we have this box pattern. All right. So if the NASDAQ can break below, actually we can do is put an order. Put an order for where the NASDAQ breaks these lows, just breaks below the 2700 region here, then get short for a move to the downside here. I'm actually looking for the NASDAQ to come test this previous lows, and I actually think they come down to these previous lows back in November here as well, as a minimum here. All right, yeah, you can actually put your stuff just above those highs on the market. Okay, so just these highs here at 2773. So let me just go ahead and do that for you right now. All right, folks, I'm going to go here in my platform. I'm going to choose Advanced US Tech 100 as the NASDAQ here, Advanced. All right, go here. Or actually, you could have chosen Order here as well. The Order button here would have done as well. Okay, so I'm going to go New Order. All right, press Sell. I'm shorting the market. And here I'm going to choose 2700. Actually, I'm just going to put it just below 2700, 2699 here. Okay. And I'm going to choose about 10 contracts to short. All right, so I'm going to put the stop at about 74 points away. All right, so as you can see here, my risk here is 10 contracts on 74 points. That's essentially what we're talking about is 740 pounds. You don't have to risk that much if you don't want to. You know, again, risk depends on how much your account can withstand, depending on the size of your account. All right, relative to the size and proportion to your account. So you can actually do one contract if you wanted to. Okay. All right, so it's a matter of risk management here. All right, so and I'm just going to put that and place the order. Okay, so that's done. For further information about trading the markets, whether you're a beginner or an advanced investor or trader, then feel free to visit my website, which is leadingtrader.com. Thanks very much.